Welcome once again to Church Alive, and this is your host and president of Church Alive Development Corporation and the proud pastor of Church Alive Community Church. This program is going to deal with mortgages and housing, when to buy, when not to buy, how to deal with foreclosure, and the many different options that are out there for you to purchase your homes. And so without any further ado, I'm going to turn to my guest, the president of Mortgage Concept, and Mr. Stephen A. Milner, and also, as we spoke about earlier, the vice president is here, Mr. Leonard J. Ramirez. Welcome to Church Alive.
Thank you.
Thank you very much.
Okay, I'm going to call Stephen. Is that all right?
That's fine. Thank you.
Stephen, tell us about Mortgage Concept and its mission.
Well, Mortgage Concepts has been a licensed mortgage banker since 1994. We are an FHA direct lender, which means that we make all the underwriting decisions. And FHA is a very, very important part of the mortgage industry at this particular time. I was a school teacher for 18 years before I got into the mortgage banking business, and I've been in the business for 26 years now, and I've seen everything there is to see. And I'm very proud of Mortgage Concepts and the organization. We are one of the few mortgage bankers that have survived the mortgage crisis that has devastated and pretty messed up the industry, for lack of a better word. And we have never made a bad loan. We don't have any bad loans on our books, and I'm very, very proud of that. We believe that everyone is entitled to a roof over their head, but not everyone is entitled to a mortgage.
The president has signed a bill which was cleared both through houses.
Correct.
And it's $790 billion. What difference is that going to make in the area of housing?
Well, I think it's going to make a tremendous impact. It may not have an immediate impact, but we certainly needed this injection of funds into the economy. Mm-hmm. In my opinion, what's going to happen now is that banks are going to be able to eliminate a lot of their bad mortgages off of their books. Mm-hmm. They're going to be more proactive about trying to provide alternative financing for those homeowners who have entered into foreclosure or are about to enter into foreclosure. Mm-hmm. I think this stimulus bill will also result in lower interest rates, mm-hmm. because there'll be a lot more funds available to mortgage companies like Mortgage Concepts, mm-hmm. to large banks throughout the country.
Mm-hmm. And Mr. Ramirez, tell us about those.
The one that seems to be making the most impact to
Mm-hmm.
the people are the FHA loans.
Yeah.
As Stephen said earlier, we are an FHA HUD direct approved lender, mm-hmm. and there are programs designed to help people possibly get out of foreclosure, mm-hmm. or to put them into a better mortgage by lowering their interest rate.
Right.
And by making good, sound credit judgments, mm-hmm. that we do at Mortgage Concepts, we're trying to make it so that it would enable a person to stay in their home or obtain a new home. Mm-hmm. And on top of FHA loans, we also do your standard conventional loans. We also have loans for co-ops, condominiums, and single, family, 2, 3, and 4 family. Primarily, we specialize in mortgage lending for residential properties.
Mm-hmm. But how does the person get to know about these mortgages?
Well, the best way to know about mortgages is to call one of our loan officers, mm-hmm. who have been trained, mm-hmm. and educated in the various conventional and FHA loan programs that are available. Mm-hmm. One of the effects of the Homeownership Act passed in November of 2008 was a requirement by the federal government that that each state start to license and educate all the loan officers, all the salespeople who are interacting with borrowers on a daily basis, which was missing from the industry for many, many years. Mm-hmm. And Mortgage Concepts is proud to say that in the 13 states that we are licensed to do mortgage banking business in, and that's soon going to be 25 states, by the way, every one of our loan officers is required to meet the state-specific education requirements and registration requirements, and there's a tremendous amount of accountability for that. So we make sure that the people that your audience are going to be calling are very qualified. They know everything about FHA loans and about conventional loans, and they are fully very sensitive to educating the consumer with respect to closing costs and points and all the bad things that you hear about.
Right. We're going to ask Mr. Ramirez about FICO, and because I believe it connects somewhat with pre-approval. Tell us about FICO, Mr. Ramirez.
FICO score, it's commonly known as, the FICO score gives you a summary of somebody's credit. When we determine, to help determine whether somebody is creditworthy or not, we run what's known as a tri-merge credit report. The tri-merge credit report, that's 3 different credit agencies, and they do an evaluation of credit, and they give us a scoring model that can range anywhere from 350 up to, I believe, 850. And the higher your score is, the better your credit rating is. And it's extremely important that not only do you make your payments on time, which would help increasing your FICOs, but also not to go to credit limits, meaning if you have a credit card of $1,000 credit limit, don't push it to the maximum and now you owe $950. That would bring down your FICO scores. The best way that we have determined is to be about 30% of your credit limit. So if you have a credit limit on a charge card of $1,000, try to keep it about the most that you owe that lending institution, about $300. And that would give you the optimum scores for your credit.
Oh, this is good. What should be the steps they should take? And then what should the steps a person take to refinance?
Once you find a home with a specific purchase price, you will then actually make application to us. And at that time, we can even, as I said before, obtain a written mortgage commitment for you to bring to the realtor or to the seller to show that you actually are, as you indicated before, Dr. Burkett, pre-approved, but you'll have more than that with us. You'll have a written mortgage commitment saying exactly how much of a loan that you're approved for.
The best thing to do is start off by contacting one of our loan originators, one of our loan officers. As Stephen was saying earlier, they're very versed in helping the consumer. We would start off by, one, determining what is your interest rate on your current mortgage, and if you're looking to do a rate and term refinance, how much of a cut in interest rate will we be able to supply you? And because with all mortgage financing, there are closing costs you need to consider. So getting your credit report ran, finding out how much of a savings you will have will help you make the determination whether if doing a rate and term refinance is a viable option for you.
I want to just throw in a 30-second question because it was, I thought we'd have more time, but I want a quickie on this one, and that is loan modification.
Loan modifications is primarily for the consumer who is having a difficult time making their mortgage payments. Basically would modify their current mortgage to a lower interest rate and possibly even cutting down how much they owe to their current mortgage company if they owe more on their home than what the value of the home is. So it's a good option, but just be careful on who you apply for modifications for. There are several institutions out there that are charging an exorbitant amount of money to do this service.
All right, we want to take this time to thank Mortgage Concept, the president, Mr. Stephen A. Milner, and Mr. Leonard J. Ramirez, the vice president, for bringing us quality information. So we thank you, and God bless you. We love you with the love of the Lord.